New Zealand's house price crash has begun. Hello everybody, it's Leith Van Onselen, the unconventional economist, chief economist at macrobusiness.com.au and the MB Fund, coming out again with another macro breakdown, where today I want to talk about the New Zealand housing market. Just to recap, New Zealand's house prices are the most expensive in the English-speaking world, after rising whopping 48% over the COVID pandemic. This has driven valuations to extreme levels, with New Zealand's housing stock GDP at around 5 times, and New Zealand's housing to incomes tracking at around 11.5 times. However, after rising 48% over the pandemic, New Zealand house prices have since fallen by around 5% since November, according to the Real Estate Institute of New Zealand, which is the Reserve Bank of New Zealand's preferred house price measure. This has come on the back of the Reserve Bank of New Zealand hiking the official cash rate by 1.25% since October last year to 1.5%, and this has driven mortgage rates higher. Fixed mortgage rates across New Zealand have doubled, and floating mortgage rates up around 1%. The fall in New Zealand house prices has been driven by its largest city, Auckland, where prices are down around 10% since November. Sales volumes have also collapsed 30% year on year as home buyer demand has collapsed, and this has driven a big rise in listings, as shown in the chart on the right. The bad news is set to continue, with interest rates set to rise a lot further. The Reserve Bank of New Zealand's official cash rate is projected to rise by between 3% according to Westpac and 4.3% according to financial markets. This would drive average mortgage rates in New Zealand to between 6.5% and 7.5%, a massive lift from the pandemic lows. Accordingly, Westpac is tipping a 10% fall in New Zealand house prices this year, followed by a further correction of 5% in 2023. Given New Zealand's inflation is currently running around 6% annually, this would infer a roughly 25% peak to trough fall in real house prices across New Zealand. New Zealand home buyer sentiment has also collapsed. The Real Estate Institute of New Zealand's latest agent survey is incredibly bearish. It noted fewer people are attending open homes and auctions, and a record 60% of agents are also reporting that prices are falling. The Real Estate Institute survey also noted that demand from investors and first home buyers has collapsed, alongside a complete disappearance of FOMO, i.e. fear of missing out, in the market. A record 81% of real estate agents in New Zealand also reported that rising interest rates are now the number one concern of property buyers. This is up from only 12% of New Zealand home buyers being concerned about interest rates a year ago. Much like Australia, immigration ran hot in the decade leading up to COVID, and this helped to support house prices. However, immigration is not expected to support house prices this time around. Westpac forecasts that population growth in New Zealand will be around half pre-pandemic levels, meaning that New Zealand's housing shortage will be eliminated mid-decade. The bottom line is that New Zealand's property bust has begun after experiencing one of the world's biggest house price booms over the pandemic. The size of the downturn will of course depend on how aggressively the Reserve Bank of New Zealand hikes interest rates. New Zealand is also a housing canary for Australia, given it's about 6 months ahead on rate hikes. New Zealand's Big Four banks are also Australia's Big Four banks, so there are clear parallels. Anyway, that's the video today, just a quick deep dive on the New Zealand housing market. Please make sure to leave a like and subscribe, and I'll see you in the next one. Thanks for watching.